Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, July 30th, 2023. The Bulls were able to take the good economic numbers that came out on Friday, and they gapped the market up, and this is pretty much the way that they've been doing it. But the one thing I'm starting off with the daily chart here, because this right here, I mean, from just a pattern perspective, is a engulfing bearish candle, meaning that it took out these highs and these lows. And from that, I mean, typically, it's if it happens at the lows, it's a bottoming process. And when it takes off at the highs, it typically means it's a top. So right here, that maybe they come up and try to test the highs again, just test this candle, but this is going to be what the Bears need to hold down, right around that 46.06. They now need to get it through, though, the 45.28. Until they do that, that's when this candle will kick in. So as long as the Bulls don't take out the top, and the Bears can take out the lows before then it will trigger this engulfing candle and let us know that this probably is the top right here or very close to it. So even though we were up 44 points, you can see we're not even close to where the highs were. And this is just an inside candle. So that's more of just that nothing's going on until either this high is taken out or this low is taken out. Bearish divergences, we have those. Again, if they're going to head higher, keep an eye on that 46.18, 46.25 level. And you also on Thursday, I had mentioned that we're at the bottom of this wedge right here when we closed. And I said, if the Bears are going to make this work, they're going to have to, open it up below here and get it to kind of touch around the 200-day moving average on the hourly, and then come up and use the 50-day as resistance. But we saw the bulls gap it open. So again, the highs are right around that 46.13 area, 46.15, and that's just this wedge right here. And this pattern's looking for a move to come somewhere down into the 41.50, 41.30 level. Again, bearish divergences on the hourly chart, and if we look at the 15-minute chart, there's not really any bearish divergences because it's just a double top on it. But again, you can see when we're respecting this wedge right here. So if the bulls can get it above this the 46.06, then what happens is we start looking at a move coming right around that 46.15. The Bears are going to have to get it through this level right here, the 45.25. If they do that, that's when we start looking for a quick move down to the 4,500 and more likely down to the 44.50. So let's see what plays out tomorrow. Enjoy the rest of your weekend, and I will talk to you guys in the morning.